Good morning, ladies and gentlemen. This is Trading with Tyler here. And before I go any further, I just want to start off and say that I feel like I have a tendency to rush some of my YouTube videos, and particularly to keep you guys engaged. But ultimately, I'm going to take a step back and I'm just going to lay out what my purpose for waking up this morning and just wanting to put some content out is. It's kind of akin to good cooking, okay? So, dang it, dog, you're making me laugh. I gotta start over.
Keep going from there. Get your thought out.
All right, let's get the thoughts out. So, actually, I got to give props to my cousin for this.
Don't even worry.
No. We're gonna give props because it's a great analogy.
All right.
So, you know when you put that brisket in the oven for 8 hours, slow cooked to 200 degrees, perfection, and you go to McDonald's, you buy a Big Mac. So, you put that time, that love, that blood, sweat, and tears in that cooking, and it makes that food. We can all relate to food. We all want the best cooked food, and just with trading altcoins, it takes time. So I'm not gonna rush this video at all. I'm gonna lay out the foundations for this, finding the best heavily confluenced trading setups there are for altcoins, and just know, yes, this will be a lengthy video, but I promise you, if you're here for the quick, fast content, then this is not that channel, because I'm trying to give you tools that you can use for the duration of your trading career, that you'll have confidence in a system where you know you will have the best possible setups possible for trading these altcoins or any asset in general, but it just takes time. And so I'm not going to rush it. I'm going to go through the system. I'm going to list out the steps. And like I said, this may be lengthy, but I promise you guys, at the end of it, you're going to want that slow cooked brisket of a meal rather than that little quarter pounder with cheese, that little fast food that does nothing for you. We're going to have that goodness right here, okay? That goodness is going to last a lifetime of trading if you apply it. This is not financial advice, so let's just get started. Okay, so trading altcoins, very important. Why it takes so long is, unlike traditional legacy markets where you're trading stocks, you have to worry about a certain asset in general, and that's Bitcoin. Okay? Well, I guess with legacy, you would have to worry about the S&P 500, and stuff like that, as far as like leading assets that affect other assets. But no, not so much have we seen in an asset class of its own where Bitcoin controls the general market share of what goes on with altcoins. If Bitcoin's going up, generally altcoins are going down, right? Did I say that right? If Bitcoin's going up, altcoins are going up, and vice versa. So an asset has to have strength against the Bitcoin pair. So before USDT was even on the scene, when cryptocurrencies came along, you traded for Bitcoin. So there might have been, there was like XRP, you traded for Bitcoin, and vice versa. So those have the most historical relevance. And so we have to make sure that the Bitcoin pair has strength and coincides with the USDT pair. You want both of them being at the same level. You don't want one being at resistance and one being at support. And ultimately, what governs the large majority of what happens with price action is going to be the Bitcoin pair. Now, so we have to go and compare three different charts here. Okay, here's why I'm gonna throw another just crazy thing out here. Is the exchanges? All the crypto exchanges there may be 20 or 50. There may be 50. I think Litecoin is on like 100 different exchanges. Okay, so if you just start trading off of those charts and just pick up on a random, like, let's just say you go to the Coinbase Litecoin chart. Well, it doesn't have all the historical, all the data that you need to successfully find all the pivots and support and resistances that you need. So that's very much unlike the stock market, where one chart is one chart. It shows all the history. So first of all, you have to go down and find all of the historical charts for all these alts that you want to trade. And so I've already done the work on that, and I did time myself, and it was 9 hours and 30 minutes it took to go and find all of the historical charts. Because, like I said, just type in Litecoin, for example, and you're going to see right here that we just have LTC. And so you have to click on each one and go and find the oldest. So, but first and foremost, Bitcoin, look at historical charts, and then go to the exchange that you're trading. Okay. Hopefully that's Binance or Bybit, because you know you can kind of knock out a large majority of the historical charts that are on Binance. But either way, okay. So these next 5 to 7 minutes, what we're going to be doing is laying out this high time frame horizontal levels that offer the strongest support and resistance. Okay. Now, if you want to understand what I'm doing with these horizontal levels, I have other videos that go in depth on these lines that I'm placing on these assets. And I've just decided to go with Siacoin because we really would rather be looking for longs in a market right now than shorts. So what do? We're just going to filter our assets by what's down the most right now. And so I'm not going to do STMX because it just had a big rally last night. It's down 7%. Siacoin is the next one. It's down 5%. So maybe we can catch a long bounce on this by the time we're done. Who knows? So that's why I'm doing Siacoin right now. And you'll see on the right hand side of the screen, we have, I'm going to put the Bitcoin here first, then the historical, and then buy. Okay? So we're going to start with the yearly. So these horizontals, I'm just gonna even type this out on the screen. These HTF's high time frame. And I'm gonna make this so we can see. Just gonna kind of horizontalize. Okay, 1 year, 6 month, quarterly. Okay, if businesses are judged on their quarterly performance, why not assets? People overlook this. 1 month, 1 week, 1 day. Okay, so 6 time frames. If you're doing intraday trading, you can go to the 4 hour, 12 hour if you like. I personally don't. I'm just trying to not trade all the time. Just would like to have an alert go off and make nice trades and just live my life. But so these 6 time frames are where it's at. So like I said, if you want to know what I'm about to do with these horizontals, I will post a link in the description showing what I'm doing here. But I'm just going to go through this in a relatively quick fashion on the Bitcoin pair. And I actually already have done this, but I'm going to go ahead and redo this because, as you see right there, I just want you to see the time that it takes. Like I said, if you want that goodness, that brisket, it's gonna take time. So, all right, here's the yearly. So we have a yearly level right here, and also note that my yearly, my 6 month, and my quarterly levels, whether they're tapped or not, I mark them because they're strong levels regardless. So this is a tapped one. That's a tapped. Okay, let's move on to the biannual. This is a 6 month. We have a nice untapped there. So we have right here untapped as well. Okay, and so that's so this is a yearly and a 6 month strong level. Look, I'm going to mark this one as well. See, look, you can see this respect right here. We're going to mark this as a 6 month, even though liquidity has been taken for the most part here. If we go ahead and just align ourselves with it, look what we have right here. Respect, support, and ultimately somewhat of a back test here. So it's still a strong level. Let's move on to the quarterly. Okay. Right here. And as you can see, look right there. See, that's why these are so well respected. That's probably the cause of why this price was stopped in its tracks there. Just beautiful respect. We haven't even gone into the meat and potatoes of it yet. So I'll mark this quarterly as well. Yeah. So if I'm looking back, so my crosshair, a lot of people have their crosshair like this, just a little. Just deviate for 30 seconds. Most people have a dashed line like this where it's kind of like translucent. You can't really see it. I recommend honestly putting your line as a solid fixed line. If you want, I kind of change the opacity so it's not so in your face and just prevalent. But if you want, make it full color like this. So when I mark this horizontal, I'm looking to my left. Now, what do we see when I mark this quarterly? Even though we tap through, let's just go ahead and hold shift and let's scroll to our left. What are we at? Resistance. Resistance, perfect. Look at this. Beautiful support. Support. I mean, exact to the dollar. I mean, so you can see this SR level is really strong. Even matter of fact, that level to me is such a strong level that so we have a 1, 2, 3, 4, 5, 6. Yes, so 6. I'm gonna even mark this a key level, even though. So this is gonna notate as a key level for me to be aware of, even though it's been liquidity has been taken from it. It's very strong. So that seems to be, look, we have another quarterly right here. And I think that's all of these for here. So when this month, in 2 months, when this closes, this will be another quarterly level. But for now, that's all the ones. I guess you could say this one as well. And again, look, this one as well. We're gonna even mark this one here, okay? Because look at the respect here. It just goes on and on. So now, I don't get in the habit of marking any monthly, weekly, or daily levels that are tapped, meaning liquidity has been taken from it. I only really like to mark naked monthlies, weeklies, and dailies, and you'll see. So for the 6 month, yearly, and 3 month, these are our strong levels here, and I've even notated a key level here. Now there's going to be a key level done here once we go to the monthly, and I'll show you here in a second. Okay. All right, so we're on the monthly chart now. Let's see. Nice monthly level right there. Untapped above right here, and then up top. And anything down here? See, it's a little bit of a weird spot down there, but it'll be fine. Yeah, I guess I'll go ahead and mark this one up here, since we're already marking them all. That's suspect. It looks like it. Yeah, I guess it did make the cut. Okay. All right, on to the weekly. And so when we get to the daily levels, guys, like, or even this weekly levels, like, see where price is to even get to this first monthly level, that's 100% away. We don't need to really go much further than that. But definitely mark out all these high time frames. So no weeklies so far yet. Okay, this is a monthly, naked monthly, and a weekly. I'm gonna go ahead and notate that just for here. I like to. So we're looking for the most numerical amount of confluences possible to give us the best setups. The more confluences and indications that tell us that this is the level, the better. So this is a naked monthly and a weekly. So while I'm notating this, is this now went from 1 confluence to a 2 confluence level. Okay, we can do the same for those higher time frame ones as well. But see, not weekly. Here's a weekly right there, and that should be it. Let's see how far we are. Price from there to where we are is 164%. See, we're done with the weeklies to the upside. Let's look to the downside. Scroll all the way to our left, and these are the ones that'll get you where we're looking for supports. Ultimately, for our long goal. And I do have a tendency, since we've been in this bear market for so long, to be looking for shorts and whatnot, but we will. I'm going to go through with the system. We'll just do the short first, which is, and then we'll do the long setup. That's enough for weekly. Now we're going to move on to the daily. Just a couple of these. They're nearby, guys. Really, if you want to. And this is like, if this was Bitcoin, we have them all marked out, but this is just a random altcoin we're trying to trade in these markets right now when Bitcoin's not moving so much. So on the daily time frame, I see one daily here. I mean, we may just place just a couple. Here's another one there, and that's this one right here. That's plenty for the supports. Okay, for resistance, I see one to the upside right here. Yep. And so that's enough. So let's back out of this for a second. I want you to take a look at this. So let's go to the weekly. This is what we have here. All these levels here. So it's just a bunch of lines, right? But we have to be organized. Come over here, go to your object tree. Just click on the first one, hold shift, click on the very bottom one, right click, create group of drawings, and just be organized and rename this group whatever you like. I just put HTF horizontal, HTF levels, high time frame levels, you know, and so we can just remove it at will. Now that's the first step. So see how long that took? That just in itself for the just the Bitcoin pair, okay, which is the most important pair right now. So what's next? Volume profile, okay. Just a quick global volume profile. Go to the weekly, the daily, the monthly, whatever. I prefer, like, I find TradingView has like a little bit of a discrepancy with the volume profile indicator. There's like sometimes it'll. I found that the daily level, if you can zoom all the way out on the daily time frame, it'll always like give you the most accurate. Not that the weekly or monthly doesn't, but sometimes you'll do the monthly, and then you'll switch to the daily, and then your lines will be off. I don't know. I think TradingView's still working on it. It is what it is. So on the daily here, just click on your VRVP volume. Now, if you don't have the premium version, you can go on your right hand side right here and click on fixed range volume profile. Works the same way. So we can turn this indicator off. Click this and click at the start. Slide all the way over, and you want to make sure this is on extend right. So let's just put on extended. Okay, so this shows you why I like the VRVP is it shows you the actual prices. You can't see the actual prices of these value area high, low, and point of control. So good part of having the premium is click on this bad boy, and we have these perfectly aligned prices where we'll just take our horizontal line right here and match up 19612. Now these are just ranges. You don't have to get like perfectly on. I'm just like OCD about it, so I like to get it exactly where it is. It also helps you track where, you know, if it's the volume area is growing or if it's not. So we do have templates for that. So this will be global value area high. The next, sorry. So I'll just copy and paste this line here and then move to the point of control, which is this red line. So what's this? 2369 Satoshis. 0.0002369. Oops. We got zero out of place. Boom. Global point of control. And then we'll just mark the very bottom one, the global value area low, which is at 300 Satoshis. Look, that's perfect. So GVAL. Now we can get rid of this on the side because it's kind of in the way. I like my charts being a little. Again, 3 more lines we have added to our object tree. Might as well go ahead and be organized. Right click, create a group of drawings. Rename it GVP, Global Volume Profile, whatever you have to do to know that this is where 70% of the volume is transacted within this range, and outside of it is the imbalances. Okay. Global VP. Lock that in place. Now, boom. Okay. Now, this is where the magic is. We have all this hard work done. There's something to be said about, I almost call it like a magnetic effect of these Fibonacci retracements of the Champions channel, or just like the CC, which is the 618 to the 66, or better known as the golden pocket, I guess most people would know, the 618 to the 65, and of having the magnetism of the like almost seemingly perfect alignment of some of these Fibonacci retracements with these high time frame levels. Can't explain it. It just confluence. It is what it is, and what it is every other really just like the Fibonacci retracements found in nature, all kinds of stuff, and we use it in trading and so there's other traders like us all using it. So and has been for years. So they just align. I don't know what it is about it, but it's so all that time that we took doing these horizontals, this is about to come to a quick head with just a couple, I guess about 3 minutes or so of Fibonacci pulls where you're just going to be like, you just know the level's there. So of course we're going to start with our. No, I'm just looking for the shorts here. We're going to do the short setup first and then the long setup. Okay, so there is a lot of lines showing here. So what I'm going to do is I'm going to have all my standard fibs pop out first. But really, the key levels is 618 to the 66. Okay, so we're going to find that one first. Sorry about that. I had to answer the door. Okay. All right. So we just pulled from our swing high to our low, and nothing's really standing out. Okay. So we'll just take this from the monthly time frame down. Okay. So I've noticed that a lot of exchanges, when there's like often like a big wick candle like this, they don't respect it as like, so they'll move on to the next high. They're going to treat this as the actual high, and this is, you see this a lot on Binance and stuff. One second. Okay, so pulling from this high down to this low, we start seeing some alignment here, right? Now, again, I have videos going over the in-depth of Fibonacci in great detail. I'm just going to show you how fast it is for me to find these strong levels. This is the pull I would use right here, ultimately for this high for our global. And this is showing me right here beautifully that this biannual level with the CC is very much the level that I'm targeting right now. Okay. Now, but I'm going to continue to stair step this down, looking at all this, and I'm going to take this key level for just a second. Just gonna. So we have all these levels, but really make yourself a template like this. So that says, you can just do the CC like this, just 66 and 618, and you're going to see here in a second. Staircase this down to right here. Look to this impulsive candle. Now this is there's confluence here. Make note of my point of control there. That's very much level. I really like that. Is really nice. Why it is just if you pull a lot of retracements, you know that it's almost a hidden leading edge right there, and that's a Fibonacci retracement guy just knows that's the one right there. Okay, but we'll go into some smaller time frames, just the daily. If I can't get it on the daily, I'll go to the 4 hour, the 1 hour, but chances are I can tell you that this is the right candle pull, because the best fib retracement pulls are from the impulsive candles at the end of the day. I think we had it where we needed it. Yeah, we had it where we needed it. Back to the monthly. There. So we have a line with this key level. 618 at the naked monthly level. We have this key level that I said was really strong. We have a CC here. And so I'm thinking right here, this is where I start to build premise for a really nice short setup here. But I'm going to just leave that there. And what I'll do is I'll go to my high time frame levels, open this up, notate where these two are. Key, horizontal. Okay, I'll put these two up to the top. Matter of fact, I'll even take that out of there. Okay. So there. But I'm going to keep going, okay? I'm going to put this Fibonacci retracement with these three because it boils down to finding the strongest. Say short one. And this is just the beginnings of this. Okay, we'll put that in place. Put that in the back burner for now. Put these high time frame levels right back on. Okay, and so let's take a bit further. Where was that pull at from? We pulled it from right there. Okay, perfect. Let's take this fib from here down to low. Okay, nice. Another one right here. So fib retracement guys will know. Look, this may seem like oh yeah, well this is the one, right? But the impulsive candles, that's what the pro traders are targeting. This little staircase, this, I don't know what it is, but this, I can tell you, if you're looking for the 618 and 66 to be here, thinking you're going from the absolute high down to the low, you're going to miss this move because it will, unless it's really strong, you know. Granted, anything can happen in trading, but if price action gets here, it will not make it up here because you're on the wrong pool. It's this wick right there. I can tell you that much. All right, just take my word for it. So this weekly level, and we also have this little bit of confluence. So this little 16% range of strength here. Okay, I can see that. I'm not so much interested in these, and I'll get into this in a little bit. Now this is a nice area as well. So we have actually three potential. I'm going to just fast forward and explain why I'm not going to target this per se, just for now, is strictly because of the risk to reward right here. I'm going to show you briefly. Put a short position tool in here. Okay, I already did this earlier, and I started working this setup out, and I realized that it's not worth the risk to reward right here. Look, it's only a 1.5 risk to reward. Great setup, strong level, but if price comes up to it, you know, so price is 91% away from this level here. Okay, and like I said, these are just high time frame trades. So when price comes up here 90%, if we were to take this trade, realistically, the most we'll be looking to make is 1.5 times our money right here to taking this trade and being in a good spot. We're not taking those trades. We're trying to take a minimum of 3-to-1 risk reward. 2.75 is like tops for me. If I'm scalping, which I don't scalp anymore or do that, it's like 2. This is not even 2. Okay. And if you're not familiar with the short position tool, you can see the risk to reward ratio. It's just garbage here. So I'm going to nix and just get rid of this setup for you right here, because I'm telling you, the one that we're looking at is on this pool right there, this area. It's a little bit better, but ultimately the one right here, this short, this little area is really good. So, and you think, well, it's not that much further, but since we're in log mode, it doesn't show the disparity of percentage going up. So I'm going to do the same short position and show you what that would look like compared to where we just were down below. So if we're to pull this tool here on our short, where's our short tool at? Right here. Okay. So we're covering that wick, and we're going to come back up, and with possibility to here. Zoom back in. Okay, cover that wick. So this is a 4-to-1 risk of reward right here. You have to let price move up on you more before you take that ultimate, you know, that sweet spot. And now this is not just the this isn't always the best, because really you could take a 275 range. I know I'm getting off topic just a little bit, but I wanted to show you guys why it's important to. I'm showing you these setups and how to find it, but you may think you have the strongest level, but it's not going to be worth it to even trade it. So that's why I'm going into this. So this 2.5 range here, let me show you. Technically speaking, we'll pull it from here. Take a look at it like this. Oops, sorry. I'm not going to cover what's on this other side. I'm going to even pull it from the body. So what's showing is this yearly level. Actually, this aligns perfectly. So the 75 percentile, really the best trades is kind of really, it's telling you that it's actually a little bit higher. But this is so far away, guys. I can't even tell you. Let's see how far away this is. That's 1,500% away. You know, we're talking like that's 3 years away, possibly, maybe more. You know, so just know that the best pound for pound trade is definitely up here at this 7.5 range. Okay, but just know that, and I can probably tell you it's probably a 7.86 level. Look at that right there. That's going to be the one. I mean, look at that. Perfectly alignment with the 7.5. Right at the yearly level, 7.86. Remember, these altcoins love the 7.86 retracement. So, but for now, we're not going to go with that one. The one we are interested in this short is right here, okay? So, this would be a setup. I'm going to just get rid of this. Now I'm going to put this key level and this monthly level right where we have it. And so get rid of all these other high time levels. These are our confluences right there. I guess we can even encompass the, there we go. CC's from right there. So I actually like it right at the 618. Maybe you know, maybe shoot for, since this is actually a really pretty broad range here, 25%. So I'd say put it right at the biannual level. Actually, right at the CC. Cover that wick. Just that one right there. Oops. Oh, this is way too far down. Look, this is only the Bitcoin pair, guys. See what I'm saying? It just gets silly. Okay. 3.5 risk reward for this trade on this setup right here. Come down just a little bit further. I do want to cover that wick. So you get your position set up real nice. Because you want to be exact with all these levels. Make sure everything's right. Okay, so we're looking at CC, biannual, naked weekly, naked monthly, key level. Now, let's look at a volume profile. Let's do some fix. This is the last step right here, okay? Last step for me. I'm going to go and take some fixed range pulls and take a look at what we have. See if I can find some alignment at some of these levels right here. Beautiful. So we have a value area high from May 1st, 2019 till now. This is the value area high, notating the top of the very top of this range. So for the last, what's that, 4 years? Yeah, it's 4 years, and it's dead in the middle of our trade, perfectly influenced with our naked monthly. I mean, so we have 1, 2, 3, 4, 5, 6, 7. This is a 7 confluence. I haven't even gone and done any other indicators. This tells me this is the level I want to short at. So I don't even look any further. I can get rid of this other stuff here. Oops. And I can just have this short position here. And I'll throw these two in a group together. I'll even name it the short. And I hope you guys are still here with me. We're on the first step of this comparing with the Bitcoin pair. Like I said, you want that good food, you gotta takes the time. Let's get rid of high time frame levels. I don't like to be so much as confused here. Put that right there. I can see all my confluences align perfectly. Then our monthly. Alright, got it. Okay, now we can lock that in place. Alright, now that's just the short position that we're looking to take right there, okay? Let me get rid of this, keep all the rest on. Okay, now that was just a short for this. The long will be pretty easy right here. Let's take this swing low to the high on. Get this out the way for a second. Okay, so set up. Yeah, well, so the best long setup is already actually just occurred. We missed the bounce, as you can see right there, right off this daily level, the 786 bounce. So we took this low up to this high on this fib pull. I guess, if anything, a potential long setup you could have would be, yeah, seems like on the Bitcoin pair it just has somewhat been missed by, to the tune of July, about 28 days, yeah. I'd say, if anything, we could come back down to these two daily levels right here, which is a yearly. Yeah, 7% down. So it looks like bounce off this. Have retested a couple times. It would surprise me if it comes back down to this yearly level right here for a fourth bounce, because I think it's already maybe in takeoff mode. But yeah, we're gonna look at this from the daily. Let's look at this from right here. Let me re-pull this. Okay, so we do have a long setup right here. So the 886 right here at our naked daily level, of course, perfectly aligned. Let's take a volume profile pull right here, from there to there. Let's just get this full range in. No, not there. Come down a little bit more. Now, if I find that it's not aligning, then it's just not there. Like that. Let's see what's over here to our left. If we didn't miss this, so from June, it's up 35%. Why don't we stop what we're doing on just the Bitcoin pair for a second, and we'll re-look at this long. And let's just take a look at the USDT pair for just a quick second on the okay. Sorry, I'm just doing some mental thinking. Seeing here is there. Okay, 1, 2, 3, 4 bounces from the CC right there. How far away is that? That is 7%. Okay, and compared to Bitcoin pair, which is 7%. Yeah, let's target this. I like this long setup in play right here for this naked daily in the value area high. That's where I would take a long from, because you sort of already missed it. But to see now, that's not like, oh, it gets to this level, we're taking it. No, when the alert goes off, you open up Exo charts, go to order flow, and you monitor order flow and trade the reaction to that. If you see a lot of open interest coming in, price going up, positive delta coming in, we know new longs are coming in the market and buyers are buying. Now, if we see price just like struggling there, maybe a fall through, maybe open interest like decreasing, that's just telling us that some of these longs are covering, aka closing, be it liquidations, manually, stop losses hit, whatever. But we're not just going to set a limit order to just open this. But I do like this as a possible long setup on this. And because really you could target upwards of, wherever. You know, I feel like a good spot would. I always really like to just target where our short would be at right there. Sorry, so at least up to where I think our short position is. So, and the long is ultimately going to be a much better risk. Look at that risk reward, 7-1. I mean, the long is just. That's why we're primarily looking for longs in this market right now, or mostly always. You know, short's good, but longs really pay. You know, because an asset can only go down 100%. You know, in a short, and but longing, you know, up hundred of percent. You know, thousands of percent. So looking at that, this would be my long entry for that. Now, that's just the Bitcoin pair. So, we have this save, and I think I'll even go ahead and get this in on it. Let me just pull one last pull right here. Make another group of drawings for the long. Because I want to make sure this would be a good entry. This is the value high between two naked dailies, a yearly level. That's 4. So that's 5. So we have one more naked daily down here to cover us with a value. So that's like 6 confluences there. And we have a CC right there aligning with the yearly. Yeah, so that's the level we want right there. This would be the long. If this comes back down to so about 6% retracement down, cover ourselves with this. Yeah, stop loss is wide. I mean, look at that risk reward though. That is wonderful. If that really actually does play out, you know, you can even go a little bit further. I mean, it's 12-1 right there. You know, those are the trades you want to be taking, not 1.5. You know, not worth your time. So we could actually see this long setup happen in the near future. But this is just the Bitcoin pair, which does govern this. So I am going to go ahead and I like to keep my charts clean. I'm just going to keep these high time frame levels. Let's see if I can find these. So these two put on with long, and then we have this naked daily on here, and this yearly level right there. And let's throw this fixed range in there with it as well. So all these we can just click on at a whim, I believe. Let's find out. Yes. Yep. We're gonna label this as long. Keep the global volume profile. I'll have the high time frame levels on here as well, but they're not as important to me. Showing this. Okay, and that's for the Bitcoin pair. Now let's just compare and see. But ultimately, I can tell you it's probably going to be pretty well in sync with it's going to be pretty well in sync with, where's our level at right here? 20. Our top is, why is my price label not showing? Our stop level is, there we go. Just making sure that none of this moves, because one mouse click and then your whole position is off. Let's copy this. Get that out the way for a second. Boom, perfect. Get that out the way, and then our stop level on this is, it's almost even too much there. I feel like you can really get away with like 15% if you ask me. Just stick with 16. I know that 16% stop loss seems like a lot, but doing your position size, it's you know, you have to calculate your position size every time. Again, I'll post a description how to do that. I got tutorials on that, but I'm not going to go in depth on that. I'm going to go with the 16% stop loss on that. 12.8, almost 13 to 1 risk to reward here. This long, looking like a 207% move up. Using 1.5, 2x leverage, you're talking about maybe 400%. But this is all if Bitcoin plays nice with this. So now, step 2, USDT pair. Lock that in place, and let's check it out. Of course, same thing with, we are going to unfortunately have to do this, but I'm not going to spend so much time on since I know where a lot of my levels are. This won't take me very long at all. Just give me 1 second. I'm going to mark these horizontals out. Really. Buying it right there. How far away is this? 50%. Okay, did another one there. Quarterly. Since I know the setup, the long setup, I'm really interested in this long setup. Where's this monthly at? Nope. Wait, this 1 monthly there. Let's go to the weekly. Sorry, I know I'm skipping ahead steps here. Only bad thing about this has been tested quite a few times. 1, 2. Fixed range. This large impulsive candle here, I'm wondering if it's a better fit pull. Maybe this is a 382. The 382 power. $786 here. Let's get rid of this fixed range, put on the VRVP back here again. Let's just hone in on this area. Yes. Point of control is right there. So from there to here. I do like it. Coming down 5% to this move. Just zooming in so I can see it. It shouldn't be. It shouldn't be. So I can see where the support is. I'm just trying to see. There we go. That's it. I wasn't zoomed in far enough on the VRVP, showing this point of control here. All right, point of control at the 618, because I knew this is the right. That was the right swing low to pull from. So come back down to this there. 6.5%, exactly where we need to come back down to for this long. Let's see. 6.75%. Exactly. Okay. So it's showing that they're both going to be coming back into this support again. Now, I've established that they're both going to be coming back on the historical pair and the BTC pair. So I'm going to go ahead and go to the Bitcoin pair here. And where I have this long setup is, I'm going to mark for where my entry is. Let's see. I'm going to mark for my entry up about 4%. And then set an alert right there. 4% away. That's just one. Then I'll do 2% away. 2.5% right there. So another alert. And then just one more, just like 1% away. This gives us time to open up exo charts and open up order flow, and just we're going to begin monitoring order flow when it comes to our level. Let us know whether or not we take the long, or if price is going to fall through, it's an invalid trade. So doing that for the Bitcoin pair, but I'm also going to I'm switching over to, since we trade on Bybit right here, we've established the historical pair. So now we've knocked out the Bitcoin pair and the historical pair for our long setup. Now we have to dial in that exact, because they can be trading at two different prices on two different exchanges. Even though they're relatively close, you want to snipe that entry really nicely. So same fib pull from this that wick, you can see it's the same one, to, oh, we need to go to the daily, my apologies. So from this to this high, how far away is that? See, that's only 3% away from that. Okay, now let's move into this. Let me look at this on the week. Okay, and there it is right there. Yep. So now that's correct. Perfect, 7% away. Yep, see, you have to find the right pivot on there. So there's our CC there. Now let me zoom in a little bit with this VRVP. Boom. Even better, showing our value area low at this level. We'd be interested in for the long. Okay, so this 618 is where I want to enter. Come up 3.5% here. Nah, just prices can be really volatile. I'm gonna go a little further. I'm gonna go 4% up from here to just alert me. So I used to just set it like 1.5 or 2% away, and then if price is falling rapidly, you don't have time to open order flow, etc. I'm getting a lot of alerts on my phone. I'm assuming Bitcoin might be falling or something. Let's see. I don't know. And price seemed to be doing something. Nah, it's not doing anything. Okay, back to where we are. So that would be the setup here. Now, see, we don't have all the data on here. We can pull that same long right here. We just need to know where the exact same setup's going to be. I don't need to have this exact. I have it on my Bitcoin chart. So I just need to compare this level and open up order flow at that level. So this is just for our long setup. Like I said, the reason why I'm looking for longs right now is just it's better. And we could actually see this possibly even next day or two, maybe today. So I'm just gonna take a look at order flow even right now. But as far as that's concerned, horizontals, volume profile, Fibonacci, that's it. You know, Bitcoin pair, historical pair, then your exchange pair. Tedious, but if you want to be in the top 5% traders that actually make money, you have to. It takes that time, especially with these alts. You know, it's not like trading Tesla or whatever, where it's just one chart and you have to worry about so many different factors. But the rewards can be really great with the volatility of crypto, and that's that. There's the brisket. Take it out the oven. eat it, enjoy it, and hope you guys got something out of this. Take care.